I think we're going to see the same thing with AI. That's going to dramatically change the landscape for all kinds of things, including the trading or investment markets that we all have to pay attention to. But it's so soon that we don't even know what the impact is going to be. And I think on my own podcast, a number of different people have said this in the same way, that we're only really, what are we now, 14 years into cryptocurrencies. Like, gold's been around for 2,000 years
Right.
or 5,000 years. Like, we're not sophisticated enough to understand what cryptocurrencies can actually do. And they become the object of speculation in the meantime.
The demise of the dollar, do you feel like cryptocurrency, possibly even the gold back, those might be solutions that would step in front and be a little bit more stable in the future?
I think that maybe down the road, I'm a fan of blockchain because of the privacy that it allows, and the record of ownership. I think that as an innovation is a useful thing. And I also think it's going to make the banking system much more efficient. Like, you're going to cut out middlemen, which is just means you don't have to pay fees that you don't understand or don't want to pay. So I think that it's a move in the right direction. But as we've seen, just take Bitcoin as an example, it's hugely volatile. Anytime there's an innovation that comes into the market, it gets speculated on, and the speculation drives prices up and down and sideways, and like, it's more of a mob mentality. I think that the technology behind it is good and will be improved. Like, we're still seeing blockchain getting hacked by whatever. I think that'll be improved over time. But I'm right. I mean, at this time, I have not been a crypto evangelist, just because it's so speculative. And there's a lot of people that get drawn into that market because they're like, oh, this is the solution to government manipulation of fiat currency. And I totally understand why that's a attractive position to take, but it's not there yet.
Yeah,
And then,
I think there's an argument for cryptocurrency where it's the inflation killer. There's like a whole ton of reasons but then you see the markets go down and crypto goes down with it. You see inflation go up and crypto goes down. And it's a lot of the reasonings there don't really hold water as of yet, and maybe in the future. But same thing back to kind of chasing the next solution of the tech stocks, trying to buy it at highs, or any investment that's everyone's hyped about.
I think
if you were early enough, it's great. But
I think we're going to see the same thing with AI. That's going to dramatically change the landscape for all kinds of things, including the trading or investment markets that we all have to pay attention to. But it's so soon that we don't even know what the impact is going to be. And I think on my own podcast, a number of different people have said this in the same way, that we're only really, what are we now, 14 years into cryptocurrencies. Like, gold's been around for 2,000 years
right.
or 5,000 years. Like, we're not sophisticated enough to understand what cryptocurrencies can actually do. And they become the object of speculation in the meantime. And you know what? It's weird because I have a lot of people that come on to my show, and they're very persuasive. They're very logical, and they make a good case for crypto being an alternative to fiat currency. And I'm always persuaded by what they say. And then I think about it. I'm like, yeah, but it's still being, it's still an object of speculation. Like Michael Saylor, for example, is I was just writing about him like last month. he's a huge proponent of Bitcoin, and he put a bunch of MicroStrategy money into Bitcoin, and on a daily basis, he's either up like a couple $1 billion or down a couple of billion. It's
you gotta have a strong stomach. You gotta have a strong stomach.
I mean, maybe if you have billions to worry about, then I don't know. I'm just not a huge fan.
Yeah, I think with any investment, just for anybody listening, just be okay losing it all. I mean,
yeah. Well, I mean, and that's one of the pieces of advice that we give is on those kind of speculative ventures, and I would include crypto in that. It just makes sure that that you're not betting the house on it. You're just speculating, and maybe you make a lot of money, and that'd be great. But it's still valued in dollars, right?
Mm-hmm. Mm-hmm.
Yeah. I have a friend. So I got a position in some different crypto and stuff like that, and he was just like, "Oh, when are you gonna sell? When are you gonna sell?" I'm like, I don't, either at 0 or 1 million, I guess. I don't know. Like, I'm not
okay
gonna sell.
Like, as long as you know what you're doing.
If it goes to 0, I'll be like, hey, they got me. I don't know. But if it's the technology everybody promises, then cool. I feel like.
But even just the fact that we're having this conversation is like, there's not any stable. There's no basis for the valuation. It gets traded in the market, and we kind of all jump in because we know that the market can be fruitful, but it's not investing, it's speculating.
Right. Mm-hmm. Now we know that there are some correlations between inflation and a lot of the commodity prices. Are there, I guess, commodities that you would recommend that traders would pay attention to, watching kind of what those correlations are, maybe looking for opportunities to take advantage of with the rising or potentially falling inflation as that all plays out in the near future?
Yeah, I'm just like, long term, this is not a speculation in my view. It's just long term. Anything that contributes to cheap energy, I think, is going to be a good play. So I think oil is going to be a good play for a long time. I think natural gas is going to be a good play for a long time. I think things like copper and silver, the stuff that we make computers with, and electric cars, whatever the fancy of the corporate world is, it still needs all of those amenities. Rare earths, I still think they're worth paying attention to, because they go into our phones and our computers and our cars and stuff like that. I think all of that over time, even with the inflationary, like, let's say it goes, what's the phrase right now, disinflationary, it's not rising as fast. I still think that the demand for commodities over time is gonna rise. I think it's just management of the companies that you want to invest in, which is a whole field in and of itself. It's a big chunk of the newsletter business is studying that produce commodities and mining and that kind of thing. So I think over the long term, that's definitely, in my view, a good place to put your money. But there's pitfalls. You got to understand how those companies are managing and what the difference between investing in the actual materials themselves and the companies that produce them.
No, fair point.
So, I want to get into some of the regional banking for a minute. I don't know if you've had how much research you've done or how close you've been watching some of the regional banks specifically. But so my little tinfoil hat theory is that the Fed, Jerome Powell, has a list of banks that are on the brink, right, of just collapsing. And I think there's like a certain category for every time they raise a quarter point and they go, okay, we got to check on this bank because they're on the edge, right? Because we saw the rate hikes, and then you see SVB go under, you saw FRC, you raise it again, then you see PacWest starting to get bought out by Bank of California. And there's like all these like little regional moves, but yet every time they come out, the banks are stable and secure and nothing to worry about. How big do you really think that the underlying problem is for a lot of the regional banks currently?
Well, I don't think we get, like, certainly if you're just following mainstream news, like, I think it's a big deal. And it was a big deal in the financial media for, from March until like May.
I feel like the shortest time ever, but yeah.
Yeah. But then it was taken over by the debt ceiling debate. And then it was taken over after that by more stuff going on in Ukraine. Like the public's perception of what is challenging to the regional banks is like, it's fleeting. Like nobody really cares. Unless you're an investor in banks, and then you better know like how these banks are run. The example of SVB was just I don't know, as a writer about these things and an observer, it was just entertaining. They told stuff that's what happened. They put all the money in treasuries, and then they didn't have a risk manager who was understanding what would happen if they started raising interest rates. Like it's insane to me how much money was going into that bank. They didn't have to invest it because there was a lot of flow coming in from tech startups, people that were just trying to put their money somewhere so that they could make payroll and stuff like that. SVB didn't have to invest any of that money. Normally a bank takes money in and then they invest it and then they kind of manage the risk of their own investments, but they didn't do that. They put it all in treasuries, and then the Fed had to fight inflation, and they didn't do anything. The bank went under in 48 hours. It was just like, I don't know. I didn't have any money in banking. I didn't have any, dog in the fight. But I was like, it's just entertaining to me.
There had to have been, there had to have been some kind of red flag.
I understand that it was not a good thing, but I was like, man.
There was I think flight logs of like some of the Fed flying out to the banks like before the news broke, before like there had to be some kind of red flags that were coming up, and just all that news was kind of released later, and just the how quick it was. It took a weekend, for an entire bank collapse. And
it started on a Thursday. It was over by Friday night.
Yeah, that's crazy.
Insane.
I know. I haven't seen.
I just have an opinion about that because I think the bigger issue with the banking system right now is a systemic threat, which the FDIC, Treasury Department, and Federal Reserve, they claim they have a handle on it, but that's all we hear from them is like it's not a problem. But they also publish, if you go. The Treasury itself publishes a thing called the Contagion Index, and it lists the unfunded or the losses that are sitting on big banks' balance sheets that they haven't declared yet, and it's in the trillions. You could just like literally just Google it and look for Treasury Contagion Index, and it shows that some of the biggest banks, and JP Morgan is one because they bought up a lot of the liabilities, mostly from First Republic. They just added those liabilities to their own balance sheet, and they're undeclared losses, and they're just sitting out there. So I think that the systemic issue with the banking system is a bigger deal than regional banks per se, because you really only care about the regional banks if you're an investor in banks. If you think that banks are a good investment and you have your money in them, then you want to pay attention to those to the stories that go along around those. I think the bigger issue is the centralization of the banking system as a whole. And
well, I guess the thought process for the regional banks is because if a regional bank goes under, a handful of people, probably too many more than should, get affected. But I think it's more of the contagion, like you mentioned. It's more of how deep is this issue, and if the smaller banks are feeling it, how much of that is leaking into the JP Morgans and the Citibanks and Bank of America? Like, is that a problem that they're facing as well? Because if we start to see any of the contagion kind of reach the bigger guys, then we're definitely sitting on a house of cards, and there could be some bigger issues, I think, in the future with that.
Yeah, I think so. And the top 5 banks on the contagion index are JP Morgan, Wells Fargo, Bank of America, like pretty much all the big banks that most people have some kind of banking relationship with. It's just really interesting to me because, maybe it's not a big deal, but it's kind of hanging out there, and it bothers me. And then because I was interested in this topic, I was reading Anatomy of a Bubble, which was written by a guy named Garrett in 1933. It was published in 1933, but he was looking at how the collapse of the stock market in 1929 affected all of the banks, the regional banks. The banks are the ones that go first when the financial system kind of starts falling apart. That's why I think it's important to look at regional banks, and it's also important to look at the contagion index. And then the other thing that is interesting to me as well is those big banks like JP Morgan, for example. If you take up all of their assets, they have the 5th largest economy on the planet. So there's only 4 countries that are bigger than that bank, and it's like the U.S., China, Germany, Japan. Like, they're a massive institution, and they have all of this unrealized loss sitting on their books. It's like a big deal that everyone's like, well, Jamie Dimon's really smart, maybe he should run for president. That's like the way it gets interpreted. But
I don't know. I think being the president is not the best job in the world, and I think you could probably control the country and what you want from being a Jamie Dimon or head of BlackRock or.
Well, I mean, like that. Right? Even JP Morgan itself was founded by JP Morgan, who bailed out the government twice.
Yeah, so you probably have a lot more power actually than a president in some of those positions without the criticism.
I don't know. So those things are interesting to me. I don't know. Like like I was saying before, I think the macro trends are important to pay attention to, but the micro choices that you make, like what are you going to do with your money? Can you get a good interest rate? Should you speculate versus invest? Like those things are more important when you're trying to manage your own money.
Yeah, for sure.
The macro stuff is really just fun writing about.
Yeah. Well, I think you can't get caught up too much in the there's a lot of the macro you're not going to be able to control. Like the macro is just it's going to flow the way it's going to flow. But yeah, the micro and what you do when you get up every single day and how are you able to contribute to your own success and build your wealth and what to invest in. I think understanding, like, I don't think discounting the macro at all is worth doing. I think it's very extremely important to understand the history. That's why I love having you on the podcast, because understanding kind of what we've come through, how we handled other crises. This crisis is very different than 2008, but there's some solutions that the government figured out during that one that they're going to slowly, if not already, kind of run the same kind of like, here's my little playbook, and all right, this worked in 2008, let's try this one again, and they kind of experiment with everything until they figure it out. But just kind of understanding that will at least get you into different areas and look at different investments as good opportunities to make those micro decisions. So I think it all kind of comes together.
In order for us to transition out of whatever macro state that we're currently in, what micro moves would you be looking for as clues to potential changes in the big macro market?
That's a really good question. I think we're kind of stuck until the Fed is clear on what interest rates are going to do, because not only is the Fed determining interest rates for us, for U.S. citizens, but they're also determining the path forward that most of the other central banks of the world are following as well.
Mhm.
So they kind of like make their decisions and then interest rates follow. And until there's a clear path, interest rates are going to determine even micro decisions for quite some time, in my opinion. And this is just, again, I'm just sort of reiterating my thesis is that trying to manage a fiat currency is what the Fed's trying to do. It's what the Treasury is trying to do. It's what we have to do as investors too.
Mhm.
I think micro decisions, if you can get a good rate here, or you can buy this at this price and sell it at the next price, or you have to find a good piece of land and you want to hold on to it for a bit. Like those are the types of decisions you have to make in your own life. But you, like you said, you can't do anything about the macro situation. And in my opinion, the economy is just in hold. I've been writing this series I call The Tour of Great Complacency. I like the Great Depression and the Great Recession. Right now, I think we're in the Great Complacency. We're just like waiting for something to happen. I've been to a bunch of different. My daughter's looking at different colleges. I've been to a few concerts. I went to a few conferences this summer, and everywhere I go, everyone's just sort of waiting for something to happen. I don't know how long that's going to last. I think this fall is going to change things, but right now, the macro picture is not resolved enough for to make big decisions.
We'll have to get you back in a few months or a year, or as soon as something happens, so we could dwell on. This is what we could check off what we were right and what we're wrong on, but we'll see, because it's a very fluid situation out there.
I think if we talk again in October, we're gonna have.
Yeah, I think that would be a good idea. Bring it back in October, and maybe we'll catch the top of the market somewhere. I don't know, but appreciate having you on, Addison. Ladies and gentlemen, this is Addison Wiggin once again. Hold up that book one more time. Give me another quick plug. There you go. The Demise of the Dollar, and we'll have all the description of the book, where to buy it, all that stuff into the description of the podcast too. So if anybody wants to read it, pleasure having you on.
If you want to join me, I have these kind of conversations on a weekly basis on my own thing called the Wiggin Sessions, which you could just to the Wiggin Sessions and sign up.
Awesome. And we'll plug the link into that too, so it's easy for you guys to find. Awesome. And then Tracy, always a pleasure having you on. All you guys that listen to us each and every week, we appreciate having you guys here. But until next time, we'll catch you guys in the next episode of the Pivot Podcast. Take it easy, guys.